And the more you think about it from an auction standpoint, in the sense, I was actually telling my group this today, if you have an iPhone and you have a finite supply of iPhones and you're selling them for $10,000 for the brand new iPhone, and that's the price of them, yeah, there's going to be some buyers out there for them, but not very many. Somebody's going to be out there and saying, I want to buy an iPhone, I'll pay $10,000 for it. But then there's going to be, a point when the price naturally has to drift down. And if you look at your tickers like that and you understand that everything is a market here and the prices of things are not going to remain high or remain low, it's going to be driven by the participants of the market, it starts to add color and life to the things that you're trading. And so I'm big on market profile and auction theory when I'm looking at these tickers, specifically something like futures. It's such a pure marketplace that you're going to have these areas where you go into consolidation and it's this push and pull of liquidity and this fight between buyers and sellers. When you resolve out of those areas, generally you're going to get a snap higher or a push down lower. And those are generally the areas that I'm hitting. We talk about this in my room where we go over market structural elements. In this case, we're talking about, most recently we did a webinar on order blocks. It's similar to like a smart money concept, but it's basically, you're talking about areas of liquidity where something happened. In the case of an order block, you're looking at an area of liquidity where the market came up to it and sold down violently, or the market came down to this area of interest and it bought up violently and it left behind a signature. Usually that's inefficiency in the market candles. If you're looking at a bar chart, it's going to be inefficiency in the market. You're going to have a very inefficient market where orders were filled into the market and then they have to come back and retrace that area of liquidity. So it's a mix of all of these things: auction theory, market profile, market structure, price action trading.